I know nobody can hear you over there, but is that serious? The headline of the Ford Ranger? That is serious. So in the US, it's normal, but in the UK, only in Europe, the Ford Ranger is gay? Hashtag what? Hashtag very gay raptor? So it's like a rainbow colored Ranger. Alright, so that's a real thing. That's not like, nobody's joking with me here. That happened? Wow, that should be that's like front page news, man. Ford Ranger comes out as gay. How about that? Well, good for them, It's that, what do they say? You be you. You know what I mean? Ford Ranger, have that son of a gun. Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How we doing out there? Speaking of Ford Ranger, so we're in our temporary studio as we build out everything else, and I guess I made a joke about sending a Range Rover, and so Ernie sent us a Range Rover. It was a little bit small to fit in, but it's a pretty sweet one. We've got it on the wall here. Thanks, Ernie. That's what we got. So Ernie says, "Hey, man, here's the Range Rover for you. I hope you enjoy it. A little bigger next time would do the trick, but I get it. That costs a whole lot more. Thanks for sending that. Well, that's going in the office. Whoever gets the office gets the Range Rover now as well." So this is just a show about the stock market. We're long-term investors here. We're actually financial advisors that focus on retirement, long-term investment goals, planning, and all that good stuff. We try to help keep your dough straight. And I just like to talk about the stock market every day to give you an update as to what's going on there. And we're going to do that today. So we got some good stuff here for you. Also, tomorrow is our Wine and Wealth class for clients. We do that every Thursday night for clients. Just going to be right here. We'll hang out, have a glass of wine with me. We're going to be talking about the odds of the probability of profitability over every single time frame that you could imagine. So if you're planning on investing for a car or a house 5 years from now, 10 years from now, what are the odds you're actually going to make money? Everybody says market goes up all the time, but no, that's just what you've been used to here lately. So we're going to go over that, looked at every single day in the stock market. Since 1928, when the S&P became the S&P, we took a look back there. All right, let's get started here. September, well, we got... Happy September, by the way. We start off with horrible economic news, actually. Private payrolls missed by 250,000. That was actually a pretty big miss, if you follow that sort of thing there. Mortgage applications missed. The only positive one was construction spending was actually up. So that beat expectations there. Helpful for the construction-related companies there. If you're looking at the stock market here today, you're going to see a few things. First of all, you've got the Russell in first place. It was the leader today. Now back in third place year-to-date, by the way. Taken away from the Dow. So the Russell's up 16%, the Dow's up 15%. And so taken back third place there after having a really stellar run at the end of last year, then just being quiet for most of the year. Great little rally here. You had your 10% pullback in the Russell 2000. And today was really all about small cap growth stocks. Give me just a second here. Do one of these things. All about small cap growth stocks if you were looking at the Russell 2000 today. Leaders. I got to learn to type, man. AMBA. So if you happen to be looking over there, they beat on earnings by 10 cents, raised their guidance for everything across the board. Really, really strong small cap growth stock there. That led the way. Small cap index stocks were in second place overall. There you go. Where am I at, man? Where am I at today? Oh, boy. If you go over, you can see it. So if you go over to Select Quote, this is small cap growth stock as well. Huge day for them, up 14%, but beaten down, right? Obviously a massive beat down the last two earnings cycles there, just starting to recover. I will say that if you look at this, the CEOs, the CFOs, the COOs are buying the devil out of this dip. They like it, buying shares at $8, $7.50, and so on. So they like it there. Biotech names were the biggest beneficiaries today of the gains in the Russell 2000. If you're taking a look over here at Neuronetics, company I'm familiar with, just from looking at them, up 12% on the day. They make, I don't know if it works or how this all works, but if you have depression and you're an adult, they use like a magnetic field similar to an MRI to help treat that. I don't know. So that's what's going on there. And it was just pointing out one of the bigger gainers. If you look at biotech today in a small cap, that's where you found all the excitement as far as big gains, as it typically is. The NASDAQ chilling out here, 15,610, first place year to date. 3-month gains for this one are twice that of the S&P. All right, so you have 7% over the last 3 months in the S&P, or a little bit less. You have 14% in the NASDAQ there. All that picking up here just over the last 3 months, as I said there. Semiconductors were the weak ones today. If you're looking NXPI, just pulling back, man. A lot of, like I said, under the surface, there's a lot pulling back. If you look at the stock market, the S&P right now, and you have a basket of stocks, and they're not all Microsoft, Netflix today even, Facebook, I'll throw in NVIDIA in there and Tesla lately. If you don't have those stocks, you're lagging behind. There's no two ways about it there. There is no way officially to be on track with the index or better than it right now if you do not, or if you're not heavily weighted towards those stocks, which is dangerous, right? In the short term, you think, all right, you know, let's just do what I got to do. But man, that's going to be dangerous. AMAT. Also one of them in the semiconductors that was weak today across the board. Texas Instruments weaker on the day. If you're working there, apparently you're going to have to get the vaccine. That was some of the news out from them. I don't think that was the reason for the decline. Just weakness across the board. Retailers in the NASDAQ kind of weak today. Ross Stores being one of them. Dollar Tree breaking down under recent lows there. And Lululemon. Pulling back to the 50-day. A much-needed break. That was an impressive run, kind of out of nowhere. I know retailers did well through the reopening and everything, but a much-needed pullback, I would argue, there. If you're looking at the S&P 500 here today, August was the 7th straight month higher. I mentioned that yesterday, actually. I think it was everywhere in the headlines there. What you don't see in the headlines is this has happened 15 times now in the entire history of the S&P. 11 in a row is the record. 11 straight months in a row. That's actually happened 3 times where you've seen 11 months in a row. The S&P gained higher. Now, there are 15 total times, so 14 previous times where the S&P had a 7-month stretch. If you were to look at that, those months there, the 11th, there's only 11 of them where the 8th month was higher, right? Let me say that again. It makes sense there. I had a Biden moment. Sorry. Can I say that? Probably shouldn't have said that. 15 times. There are 14 previous ones there. There were only 3 times, I'll say it that way, where the 8th month was positive. In other words, 11 times the 7th month of gains was the last one, right? So if you look at it, if you want to look at it that way. If you take a look at the S&P today, if you're looking through at Apple, Facebook, like I just mentioned again, Apple, Facebook, Netflix, if you don't own these, then you are dragging behind. No two ways about it there. And those were the biggest contributors here today. PVH, that's earnings related there. That was the biggest gainer in the S&P. And Kansas City Southern, nice reversal here. You got a takeover possibly happening here with Kansas City Southern. Great reversal from yesterday. Even though they're talking about this now, still a technical pattern. Technical traders will still pay attention to that. Financials were the drag. Wells Fargo, impressive pullback there. And a lot of people don't like Wells Fargo, so maybe you're rooting for them to fall a little bit more. But even still, Bank of America fell. I would say energy, also weak. ExxonMobil, Chevron, that's where you're going to find your pullbacks, financials, and energy at the moment. And that's what you have there. If you're looking at the Dow there, it's now in last place year to date. Still 15% gain, so we're not like complaining, I guess. But compared to the other indices there, it is the weakest one. And if you're playing Guess the Dow, here is our current leaderboard. I'm going to be taking over today. You got Alex in first place, Guess the Dow, 35,308. Got a little bit of a spread there between that and David. And then basically David, Matt, Amar, they're all really, really close in terms of their guess. And then you got Daniel down there at the bottom. I believe that's a client. I could probably guess that last name if I tried. So Daniel down in 5th place there. You're welcome to play. jazzwealth.com/guess the Dow. We play the game every day. The winner at the end of a week, whoever guesses closest without going over, we'll send you a $100 gift card or credit your account $100 if you want to play, and you're welcome to play. Moving on over to the sector breakdown here today. I'll show you something a little different. not necessarily a sector, but let's look at the industries here. Let's look at auto companies. You know the names here. Ford, apparently with the Gay Ranger. General Motors, Toyota Motors, Volkswagen, Daimler, and Stellantis. That's, you got to think of like Fiat and Chrysler and stuff. That's Stellantis, right? So over the last 1 year, and I'm showing 1 year on the charts here, they've killed it. You got some really impressive gains. Ford at one point up over 100%. You got Volkswagen up over 100% there. The demand's strong, obviously. We all know. Everybody's going out there and buying cars, right? This is so much that there was semiconductor shortages. That's the talk right now if you're following the market. We got semiconductor shortages there. And, well, that trickles down, right? So when you look at the performance of the year for these stocks, you say, well, that's pretty impressive there. But let's go just over the last 3 months. If you look over the last 3 months, we have some decent pullbacks here. You got 17% in General Motors. You find it right over here. 10% now for Ford, basically right on the dot there the other day. Pulled back exactly 10% there. Looking through, also Daimler, if you're following them as well, you got nice pullback. So again, another area of the market where everybody looks over here at the index and goes, oh my gosh, I gotta get in that. Well, unless you're in those 5 or 6 stocks, again, you're not going to keep up there. So you got to really look deeper. Start looking for your things to buy. You're getting your discounts here in a lot of areas, by the way. Okay. So chips, the main reason, right? We have to stop making as many cars because we can't get the chips there. What we have, NIO, they cut their production on their electric cars because they don't know what they can do as far as getting the chips that they need to produce these cars here. So look at the year-to-date performance and look at this recent pullback inside of here. Not a big pullback, but still, you've got weakness. Now, this translates over to everything. So I'm going to back out some of these automakers. Think outside the box a little bit. Where do you go? I'll give you 4 names here that you can kind of see have also participated in weakness, meaning they also have pullbacks to look at, almost all of them. You got Magna here. They make parts. They make like the lift gates. They make trim kits. They make like chassis for different manufacturers, seating, things like that. So you're going to find that Magna, that's what they represent. Naturally, if you're making less new cars, they're going to take a hit, down 21% here just over the last 3 months for a pullback there. You've got Continental and Michelin, right, which you guys probably know what those guys do with their tires and whatnot. Also there. And then Denso. So Denso is like a spinoff from Toyota Motors there. Toyota still owns like 30% of them or something there. But also stocks that are pulling back on that news. So it's outside the headlines. It's outside Ford's pulling back. It's a 10% pullback. All right, that's the obvious one. Look downhill and see who's affected by that. People that make the seats for new cars. They're getting less orders now. They happen to still be doing just fine. They're gonna make it. Don't you worry about it. But if you look at those companies, I took another way of breaking it down for you. Let's see what we've got. Here's the change. Looking back since June, right, when they started getting a little bit weak, what's the pullback in all of these? Ford, the biggest pullback, 18%. General Motors, 22%. Magna, 23%. You've got corrections in a handful of these stocks as well. Volkswagen, Daimler, Continental, if you're into looking at those kind of things. Michelin, the only one holding up. So if you're looking for relative strength or looking for pullbacks, you now have a way to look at it. It's not the most exciting thing. I could cover things like this every day, but you know, if it doesn't have the words Tesla or Cathie Wood or Bitcoin in it, then nobody really cares. So every now and then, I just like to get you guys with something like that and see if that helps you. Hey, let's do the new highs and lows, right? When everybody's thinking of one thing, go look at something else. Think of the next layer. All right, new highs and lows, you got Comcast. This is that breakout from yesterday. That continued a little bit, about 1%. Not too bad considering the stock market didn't do a whole lot as a whole, so not bad. You got Equinix. We talked about this as a breakout, playing catch-up. Just yesterday we mentioned the idea of them trying to play catch-up with their competitors, or their peers in the sector, because it's been lagging just a little bit. I'm glad to see that because we own it. PVH here, that's going to be earnings related. That was the best performer in the old S&P today. They beat by $1.52. Like they were expecting $1.20. They beat by that and then 30 more cents. I mean, that's crazy. Raised their guidance, very positive in people buying clothes and stuff going back to school as well as back to work. First time you've had those two things go together, huh? S&P Global, just wanted to point that out. That did break out today inside of this monster uptrend. Remember, we talked about NASDAQ yesterday. That continuing as well, looking pretty good there. And Cintas, there you go. Very clean, crisp breakout. For some reason, not a lot of interest at the moment, but it kind of flirted with new highs, poked up there, and just nobody came to chase it. Loses a point, in my opinion, for that, but still potential breakout. And then AbbVie, it hit new highs and then just got slapped by the FDA there. Put a new order on their arthritis drug. It will turn that off. There you go. And just a beat down. These are tough stocks, man. Everybody looks at biotech. They're big gainers, big movers, but you got to be ready for this news that comes out of nowhere and can just beat down a stock like that in no time. Stocks in the news, here we go. By the way, speaking of in the news, on our Facebook and Instagram, took a picture of the new studio. We're trying to decide between the brick. There's 2 different types of brick up there. Tell me what you think. Let me know. We'll have a little vote. All right, Facebook hits new 52-week highs as well. They're going to start de-emphasizing current events and political stories. They want to make the experience on Facebook less political, and people don't care. The stock was sitting at new highs. I think okay, that's fine. Do what they want to do, I guess. Nothing you can do about that. But look at the ad side of things. They generate revenue from people that spend money on ads. They then sell the data, obviously, to target the right people. You know how it goes. So look at that. That's not keeping up with Snap. It's not keeping up. Well, Instagram's doing fine, which is them, so that's fine. It's not keeping up with TikTok and stuff. It's not keeping up with LinkedIn at this point. So I think there's a little bit of worry there, which also, remember, this is what's helping drive the market. That's one of the 5 spokes of the market that's being held up right now. So there you go. Feel-good story of the day. Intuit, they're going to be buying MailChimp. I think it's all but a done deal. It's at least they had to bid the $10 billion to buy MailChimp. Do you know what MailChimp is? If you own a business or you ever tried to have like a newsletter or a little side business, you probably use MailChimp. It's a really good story. I love these guys. If you ever get to look into this, they built that business with no debt. They didn't take on any debt. They didn't take on any investors, kind of like old Jazz sitting here. We're just building little by little. Every time we make a few dollars, we put it back into the company. And they're worth $10 billion. So they have nobody to pay back. They're going to get a big fat check from Intuit. I just think that's cool. I like seeing things like that. Intuit, by the way, this would be their largest acquisition. If I go back and look, what was the Credit Karma was their biggest acquisition ever, and that was at $7 billion. They're paying $10 billion for MailChimp. Good for them, man. That's just a cool story. I like to see people start something, fight through all the hell they have to go through, and then get paid in the end. I like it. Amazon, the company is going to be hiring 50,000 more people around the world there, so it's getting to be that point. Remember when it used to be like everybody worked for Walmart? Now it's Amazon. Coinbase still gained on the day there. The SEC chair is saying we got to regulate crypto. It's not bad news. It's good news. I've maintained, look at anything. Look at Bitcoin today, I think was even up. Yeah, there you go. So I didn't look today, up 1,000 points. Wow. It's good news. Crypto people want to be regulated. They want to know how they're going to pay tax. They want a clear 1099, and that was 1099K, or what's it going to be? So they want that clarity, and I think that's good news, actually, for Bitcoin and all the crypto people that are playing along in the reasonable, coins that have a use. So NEO, actually down a little bit lower on the day. They did cut production by about 5% so far because they're not sure that they're going to be able to get chips to make their cool cars there. PVH also. Island gap to highs here on earnings. I already mentioned earlier what that was. And if we go over to last bit of news here, and then I'll see if I can take your questions. Pepsi's paying out $1.08. FedEx paying out 75 cents. Dominion paying out 63 cents. Pioneer paying out $1.53. And tomorrow, you've got earnings from Sienna, Abercrombie, Hormel, Broadcom, DocuSign, Hewlett-Packard. So earnings is still very much going along there. See if I can take your questions and be on my way there. Berlin ready for a dip. All right, there you go. Ford, General Motors missed production numbers all year. It's not a good time. Not a fun time to be running that company or having to answer to the people that do. It's a difficult one, and that sucks because it's like, here's your chance, right? That's a tough one. And who said it? Something about fires. I saw it. You got it. General Motors, right? The battery fires, man. They're trying. You hope that doesn't translate into Ford or whatever, too. You got to get it, man. Anti-business administration. Well, I think, so I'm against, obviously, regulation in the markets in many ways, be it the pay-for-order flow. I mean, you want free trading. That's what you get. You're going to pay a fraction of a penny, and you're just not going to see it. Taxing Roth IRAs, things like that. I mean, I get a little passionate about that, but I think that the sort of big influencers in Bitcoin, even some of the transaction type players out there, I think they welcome regulation. It's just like the pot stocks back in the day. They just want to know where they're able to operate, right? If it's legal, is it legal? What can we do? How do we report things? Bam, let us go to work. Right? Same with crypto. That's what it's going to be. You're going to treat it as an asset. All right, how do we need to report the 1099s and all that? Let's get a uniform thing for that. Let's have a uniform thing on filing our taxes. A lot of confusion there still, by the way. People, I find most of the time, I'm talking to clients and stuff, they pay way more than they're supposed to because they got a 1099K and they're like, I don't know, I just put it in TurboTax. Do not do that, by the way. You, depending on what exchange you're using, do not just import your 1099K and say, well, it says I owe money, but I made a profit, so I'll pay him. In no way do you owe that. No way. Biggest money saver there. There we go. You guys are passionate about some of that stuff. Yeah, I think most people say, just let us do our thing, man. Just get out of the way. Yeah. I love it, man. Yeah, well, the thing is with taxing the Roth IRA, it's hidden. It's not like they're saying, hey, you're just going to pay 5% or something on your Roth. They would never, ever do that. They're trying to do it through transaction taxes. So it wouldn't matter what account type you have. You'd have to pay a transaction tax. Well, that would mean your 401k would be taxed, although it's not supposed to be taxed till later. That would mean your Roth IRA would be taxed. And that's going to be like that. We're going to have 2 weeks. Just get ready for it. We're going to have 2 weeks of a lot of nonsense and some good things as well that maybe help pay for some of the things that they want to do. But it's going to be a lot of proposals, and that's the phase we're in. I think by the 15th or the 17th or something, we should have some hard drawn out plans of how they want to fund the trillions they want to spend. So maybe a little drama between now and then, just so you're aware. Do we ever, Dustine, do you ever talk about options? Yeah. We've done a handful of classes for clients, and actually we were just talking today about how we're going to set up this other office to make it like a war room sort of thing so we can share our trades and stuff and have some fun on the day-to-day type stuff. So that is going to be pretty cool if I have my way. Yeah, little by little, there's going to be more taxes. If you are working with somebody, an accountant, an advisor, a tax attorney, a tax strategist, you keep their number handy because there's going to be new higher taxes. They just came out with it just today or the other day with the paying the capital gains on investments or assets at the time of somebody's death, rather than at the time of someone's sale. That's crippling, man. That's not taxing somebody only if they make over $400,000. That's taxing anyone, man. That's horrible. I deal with people all the time that inherit businesses or assets and stuff, and yeah, they have a higher value. Maybe they're even just $100,000 or something. Now you're gonna have to pay taxes on that when the person passes away. That's the proposal they have there. I don't think that passes, by the way, so I'm not gonna get too fired up over that. I think that's gonna have a lot of pushback on both sides. But we'll see. Yeah. All right, I got you fired up. I'll get out of the way now. You guys go run around and slap the wall and all that stuff. All right, we'll see you tomorrow. We'll do this again for you. Thanks for coming by. Thanks for watching and hanging out with me. See you tomorrow.